AI stocks just lost hundreds of billions in market value in a single week, and Wall Street doesn't know if it's over. We're talking about some of the biggest names in tech getting absolutely hammered. Nvidia down, AMD down, a dozen AI adjacent companies following them off a cliff. And the question everyone's dodging right now is this the start of something much worse? Or is this the moment you've been waiting for to actually buy in? By the end of this video, you're going to know three things. One, why this crash happened and what's actually driving it beneath the surface. Two, which AI stocks are still worth watching and which ones you should run from. And three, exactly how to position yourself, whether you're an investor, a freelancer, or someone who just wants their money to survive 2026 without getting wrecked. Stop and sit with this for a moment. According to data from the last major AI sell-off, retail investors, regular people like you and me, tend to sell at the exact bottom and buy back in at the exact top every single time. The institutions that make billions don't have better information. They just have better emotional control. Right now, while everyone's panicking, the smart money is making a list. You should be making one too. Point one, this crash was built in, and most people ignored the signs. Nobody wants to admit this, but it wasn't random. AI stocks have been running on pure narrative for over 2 years. Companies with zero AI revenue were up 200, 300% just because they had AI in a press release. When The Guardian started covering a rocky week for AI shares and Seeking Alpha was flagging a broader tech meltdown, that wasn't news. That was the bill coming due. The NASDAQ composite at its peak in early 2026 had AI-related stocks trading at price-to-earnings ratios that were, in some cases, 80 to 100 times forward earnings. You know what that means? You were paying $1 for a penny's worth of actual profit. That's not investing. That's hoping. And hope is not a strategy. So if you're already in AI stocks and you're down, don't make a decision based on fear. That's the worst possible time to act. But if you're sitting on cash wondering when to move, keep watching. I'm Kody, by the way. KruxisTV is where I break down AI and tech through one lens only: what it means for your money and your financial future. I drop videos like this every week. If that's the kind of content you actually want, subscribe now. Seriously, tap it and then come right back. Point two, not all AI stocks are crashing for the same reason. This is the nuance that will save you from making a terrible decision. There are two categories of companies getting hit right now, and they are not the same problem. Category one, companies that are actually building the infrastructure of AI. The chips, the data centers, the cloud, computing backbone. Nvidia, for example, still posted $22 billion in quarterly revenue last year. Their fundamentals are real. When those stocks drop, it's a market sentiment issue, not a business issue. Category two, companies that slapped AI on a product that doesn't really use AI in any meaningful way. Software companies, fintech platforms, consumer apps that ran a marketing campaign around AI and watched their stock inflate. Those companies dropping, that's not a correction. That's a reckoning. And honestly, some of them probably aren't coming back. Your job right now is to figure out which category your holdings fall into, because one is a buying opportunity and the other might just be a trap. Point three, the real reason Wall Street is scared has nothing to do with AI. What nobody's actually saying out loud. The AI sell-off isn't really about AI. It's about interest rates and capital rotation. When rates stay high, growth stocks get punished because future earnings are worth less in today's dollars. Basic discounted cash flow math. And it absolutely hammers high multiple tech stocks. Add to that the fact that institutional money is rotating into energy, defense, and dividend-paying value stocks right now. And you get a massive wave of selling pressure on AI names that has almost nothing to do with whether AI itself is working or not. Chew on that. The technology is still advancing. The adoption curve is still steep, but the stock prices are getting crushed by macro forces that have nothing to do with whether the tech is good. That disconnect is where opportunity lives. Point 4. Investors Business Daily is watching these specific names, and so should you. The IBD recently highlighted a short list of AI stocks that are holding up better than the rest. The companies that made that list share one thing in common: real, recurring revenue tied directly to AI products or services. Not hype, actual contracts, actual customers, actual cash. Companies like Palantir, which has government and enterprise contracts worth billions, or companies in the AI infrastructure space that are supplying the picks and shovels, not speculating on the gold rush. The move is simpler than most people make it. You don't have to be a stock analyst. Go to IBD's site, look at their AI watch list, cross-reference it with companies that have positive free cash flow. That filter alone will eliminate about 80% of the garbage and leave you with names actually worth researching. Don't skip that step. Point 5. If you're not investing yet, this is still about your money. To be clear, you don't have to own a single share of stock for this crash to affect your financial life. Here's why. When AI stocks crater, AI investment slows down. When AI investment slows down, hiring in AI adjacent fields slows down. And when that happens, the freelancers and contractors who built their income around AI tools and AI services, prompt engineers, AI content creators, automation consultants, feel the pressure too. At the same time, a pullback in AI investment also means less competition for people who are building AI-based income streams right now. The noise dies down. The pretenders leave. The ones who stick around and actually develop real skills are the ones who win the next wave. So whether you're an investor or a freelancer or just someone trying to figure out where to put your energy in 2026, a crash like this is a signal. It's telling you which direction the serious money is actually moving. Point 6. The buying opportunity framework. 3 questions to ask before you touch anything. 2 years ago, everyone was asking how to get in. Now everyone's asking how to get out. Funny how fast that flips. What smart investors are actually doing right now is asking 3 questions. 1. Is the company's core product something businesses actually pay for right now? Not in theory, not in 5 years, but today. 2. Does the company have cash reserves to survive 12 to 18 months of tighter funding conditions? Because if rates stay high and the market stays choppy, weak balance sheets get exposed fast. 3. Is the sell-off driven by company-specific bad news or broad market panic? Broad panic is temporary. Company-specific implosion is a different thing entirely. Run any AI stock you're considering through those 3 questions. It will save you from chasing a dead cat bounce and mistaking it for a real recovery. Point 7. What the next 12 months actually look like and how to get positioned. My honest take, AI is not going away. The technology is too embedded, too useful, and too profitable for the companies deploying it correctly. But the valuations needed to reset. And that's what's happening right now. Painfully, publicly, all at once. What typically follows a reset is a consolidation phase. The strongest companies survive and get stronger. The weakest get acquired for pennies or disappear entirely. Investors who bought during the panic period have historically come out significantly ahead. We saw it after the dot-com crash, after 28, after the 2022 rate shock. The people who got rich in tech didn't buy at the top. They bought when headlines like this one were everywhere. So here's what you do with all of this. First, no emotional moves in the next 72 hours. Let the dust settle. Second, make your watch list now, not when things stabilize and prices have already recovered. Now. Third, if you're building income through AI tools or services, keep going. A market correction is not a signal to stop. It's a signal to sharpen. The crash nobody saw coming might just be the setup everybody needed. The question is whether you're going to be on the right side of what comes next. If this helped you think differently about what's happening out there, drop a comment, share this with someone who's panicking right now, and go check out the next video. You're not going to want to sleep on it.